introduce Dream Home Mortgage a little. So with over 27 years of experience, Dream Home Mortgage has been helping home buyers and investors across all 50 states secure the best financing solutions. And whether you are a first-time home buyer, an investor, or you're looking to refinance, our team is here to guide you every step of the way. So about today's agenda, today we're going to discuss where are the mortgage rates headed in 2025 and loan options, which one is the right one for you. We're going to talk about mortgage hacks that nobody tells you about that could potentially save you a lot. And we're going to also talk about the grants and programs, anything that you're aware of right now that you're unaware of, and how you can get to know about them, and how you can improve your credit score, and the best states for foreign investors right now. And at the end, we're going to answer all your questions live. So we're here for you. You're in for a ride today. So
before we start, I'm just going to for the last 5-10 minutes, we'll keep an open forum. Anything to do with real estate, mortgages, commercial, residential, you'll are more than welcome to ask me any questions.
Absolutely. And meanwhile, you can also drop your questions in the chat box. We will get to your questions at the end of the session. So mortgage rates have been on a roller coaster in the recent years, if you say. So after hitting the historic highs and in 2023, 2024, many people are wondering, will rates finally drop? What's your take on this, Hussein?
So the good news is at least last 4 weeks, we have seen rates coming down. Last 3-4 days, the rates spiked up just by 1/8 of a point. So the good news is in last 6 weeks, rates have dropped by 0.5 point, and then last 3-4 days, it spiked up by a 0.125. But at least we are seeing rates moving in the right direction. We are approaching summer, and we have already seen a request for pre-approval. The good news is I'm seeing a lot of activities in last 2-3 weeks where I'm getting a lot of queries from first-time home buyers. They want to know about pre-approval, how much they can qualify for, how much they want, what are the payments going to be. And the most important, what I like, more and more clients are setting up their mind that this is the payment we are looking at. So the approach has changed. Instead of this is the house I want to buy, what is the payment? With this payment, how much house I can buy? And I have always, for last 27 years, I have encouraged that approach where set up your payment, then think about buying a house. A lot of 75-80% first-time home buyers make that mistake. And I guess I want to call it a mistake because first they will start shopping for a home, then they will try to calculate the payment. For a first-time home buyer, that's definitely a no-no.
So you know when you are with an expert, because in the introduction only, they have given you a lot of valuable tips. So thank you, Zay, for that. Now, Zay, what do you say to someone who is unsure whether to buy now or wait for a lower rate?
You can never, it's like stock market, you can never time the market. Okay. If you, again, just go by the recent data, February, suddenly the price, the home sales went up surprisingly. So that's great news, but not so good news for first-time home buyers who have been waiting on the sideline. Whenever we see an influx of buyers, what happens? The house price starts going up. Sellers are not ready to negotiate. In the Dallas market, DFW market, Austin, Houston, San Antonio, it is still a buyer's market. But I'm already seeing in certain pockets, houses are being listed and coming under contract in less than 1 week, going on in contract in less than 1 week. We just started seeing this in last 5-7 days in certain pockets. Let me be very clear. Certain pockets only we are seeing that activity, but at least that's good news. And definitely once there are more and more buyers, sellers won't be ready to negotiate. So the answer to your question is you cannot time the market, but if you have been on the sideline, don't wait for the summer. And this is a very honest opinion. I'm just going by my last 26 years of experience. whenever the market starts picking up, the house prices starts going up. It's all about supply and demand. It's always going to be that.
So, all right. And thank you for those who are dropping their questions in the chat box. We'll definitely get to your questions. So please keep dropping your questions. We are going to get to the questions at the end of the session. So, Hussein, everyone wants to save money. That's not a secret, right? So what are some mortgage hacks that people can use to lower their payments, or any trick or tip that you want to let them know?
First of all, suddenly what we have seen, a lot of people are taking advantage of the 2-1 buy downs. Basically, what 2-1 buy down or a 3-1 buy down. But the perfect, let me explain a little bit about, like you said, what is the hack. So the lenders now are paying for your 2-1 buy down. So instead of your starting rate being 6.5 or 6.625, your starting rate will be 4.99 or 5.25, and then second year it will go to 6.25, and then third year for the life of the loan it is 7.25. So what's happening when you're buying these $600,000-$700,000 homes? You are saving $400-$500 a month in payment for the first year, then $200 in the second year, and then you go back to the normal payment. So a lot of people, because it's a downtrend, and people, including myself, we all think that President Trump is going to bring the rates down. He has been very vocal about it, that he will do whatever it takes to bring the rates down. So if the rate starts dropping, then this 2-1 buy down or 1 year buy down is a great program to lower your payments. Other than that, myself, I'm not a big fan of buying points by itself, but 2-1 buy down, 1 year buy down can lower your payments temporarily. You get used to the payments, and then you go to the regular payment, and hopefully by that time rates will drop. So I feel some of these programs are great programs for at least few years.
Great insights. Thank you, Sin. These are very smart strategies. So, do you think there are programs that, there are programs? Obviously, I just read the question too about last time we did the session about the home buyers grant, first-time home buyers grant. So, do you know that there are more of those grants available right now? Can you tell us about some options, and how can people explore these grants?
So there are a lot of counties that offer these grants. Like yesterday, I got an application from North Dakota. The husband and wife, they make around $70,000-$80,000 a year, and they were able to get $13,000 grant. They are buying a $250,000 house. $13,000 grant is almost 5% of their down payment. So most of the counties, they have grants. We at our bank have grants, but right now we are out of those grants. It will be again available first of May. So it's there for 2-3 months. Then once we run out, then again they wait for the next quarter to come in, and then they release those grants. So that's $25,000 grant, and it's very simple. You qualify based on the median income of the county you're buying the house. Median income of the county you're buying the house. So that's a great program, up to $25,000 in grant.
All right. So I hope that answers your question. But if it did not, you can ask this again. We're here for you. Now, Hussein, there is a question about credit score that we always discuss. So your credit score, it plays a huge role in your interest rate. So what are some quick tips to improve your credit before applying for a mortgage?
Credit score, I feel, is the heart and soul for your interested and qualifying for a loan. Someone putting 5% down, 740 score, or even 680 score, they will qualify. Even 3.5% down with a 620 score, they can qualify. But if someone has a 500 or a 540 credit score, they won't qualify. So those of you who have low credit scores, don't give up hope. There are a lot of ways to fix your credit. Slowly but surely. I give this example on all my webinars. I had a client who I worked for almost a year and a half, and we brought a score from 520 to 660. And then he was able to buy a house in Irving. But it took him a year and a half to build his credit. He had a lot of late payments. We tried to get him some secured credit card. He had to pay off some of his credit cards, collection account, and then, but finally he was able to buy his house with just 3.5% down and a decent interest rate. He didn't have to pay the 8 or 9% rate. He got an FHA loan with just, I'm talking about a year and a half ago, around 6.75 rate or 6.5% rate. So if you have bad credit, you filed bankruptcy, you had some issues, student loan mess up, there is always a second chance. Don't give up hope. Call us, we will help you to build your credit. The consultation is absolutely free. We help you to build your credit, and then once we achieve that goal of 620, 680, or even 580 for an FHA loan, you can buy a house with 3.5% to 5% down with 580 credit score. Of course, you have to qualify, but I'm just giving you some general information, generic information.
Definitely, that would be very helpful. And I would like to repeat that you can drop your questions in the chat box. We have mentioned our contact number, our email address, info@dreamhomemortgage.com. We have our telephone number there. You can always contact us, and like Hussein said, you can book your free consultation session with Dream Home Mortgage. All you need to do is go to our website, www.dreamhomemortgage.com, and you can book a free session through our website. The Calendly option is there. You can book your free consultation session, and you can gain all the information you need to make up your mind for this big decision. So if there's anything you need, please drop it in the chat box. So Hussein, I'd like to circle back to one thing there about the loan options, right? People want to know which loan options are the best. Even if we go to our website, dreamhomemortgage.com, you'd see that there are a lot of loan options available. For a person who is just starting, they'll see all the loan options. They might get a bit frazzled at where to begin. So how do we know which option is right for us? And the difference between fixed rate mortgage and adjustable rate mortgage. What should one opt for?
So the most simple thing right now, fixed rate is the best option. Which program? Always going to be case by case basis. If you are a veteran, thank you for your services first of all, and VA loan will be the best option for you. There are a lot of benefits for veterans. FHA loan is great for someone who has high debt to income ratio and low credit score. Great program. FHA, yes, it is upfront expensive, even though you're not paying out of your pocket. The 1.75% that FHA charges you, that is little expensive. But hey, you can still get a very attractive rate. Conventional rate is conventional loan is all about your credit score. It's all based on your credit score. So when two brothers walk into my office or two sisters walk into my office, one might qualify for an FHA loan, one might qualify for a conventional loan. And I make sure I explain it to them that, hey, this is the reason we are going for FHA loan. This is the reason why we are going for a conventional loan. So it's always going to be case by cases. But if someone has an excellent credit, 780 score, let's say 780 score, 5% down. What's the best option? Conventional loan. 660 score, 5% down. FHA loan. So it's 660, 15% down. I will still say FHA loan. So it's always going to be case by cases basis, but don't be scared to ask your loan officer why. The most important thing you need to make sure, why are you offering me this program? Why not that program? Why should I pay this? Why shouldn't I pay this? Don't be scared to ask questions to your loan officer. Especially what I see first-time home buyers, they are really excited. They get approved for a loan and they're like, oh, okay. No, don't be scared. You will be paying for this loan. Why? I'm seeing 6.5%. Why am I paying points? Why shouldn't I pay points? There are a lot of questions. Make sure you ask before you sign the documents. If you have any doubts, make sure all your questions are answered.
Definitely, that's a good point. There's also one more thing that I wanted to ask since you were talking about the VA loan. I read on the website, on our own website, that there are some exceptions for down payment for VA loans. So can you explain a little bit about down payment? What are the options available? How what is the percentage of down payment that is available for first-time home buyers or for the veterans? Anything available for them specifically?
Veterans can go with 0% down loan. FHA now we have, now for FHA also we have, it's not, I want to be very clear, it's technically a 0% down, but there are lenders who's giving you kind of a second loan on FHA loan. So you are coming to the table with almost nothing if you qualify for it. But the rule of thumb is veterans, VA loans, 0% down. USDA loans, which is based on the county where you're buying the house, certain zip codes, not even counties, certain zip codes, you can go with 0% down. Conventional as low as 3% down, FHA as low as 3.5% down. Then with creative financing, sometimes we can get you a $1.2 million house with just 5% down. And then we have some portfolio loans where you can go as low as 10% down, as high as 30% down. Lately, we are seeing a lot of self-employed borrowers, a lot of investors applying for what is called a non-QM loan or a portfolio loan. So there are different programs, it's different loan for different clients. Every time, it's not one size fit all. Mortgage is nothing like that.
Right. So there's one more thing. I was just going to the questions that we are receiving. And definitely this was one of the main points on our agenda today as well. That we hear different news every day these days about ever since the change of president, we hear a lot of news about where the rates are going, what is happening in the real estate industry, and the burning topic, another one, the H-1B visa, all of this, last time we talked about the birthright citizenship, where that is going. So I just want to mention this question here that says that what's the clear picture of H-1B visas now? There's some different news every day. So what's your take on that? Where are we going?
So I can only answer from mortgage point of view. Our guidelines have not changed. The good news is if you're on H-1B, if you have been in the United States for at least 1 year and previously you have 2 years job history, 1 year credit history and job history in the United States, 1 year you have filed the most recent year's tax return, we can get you a regular loan with just 3 to 5% down. So from the mortgage point of view, there is no guidelines that have been updated because of someone who's with H-1B. There is no update on those. So the good news is you can go with 3% down, 5% down if you're on H-1B. Housing market overall, if the interest rate starts dropping, I definitely think the market will pick up.
All right, that's some news because every time you open TikTok, there is something about H-1B visas going on there. So probably people are actually reluctant to approach the mortgage lenders right now, thinking that there might be some sort of change. They might not be applicable for this. So that's good news that the guidelines haven't changed yet. So if you are on the verge, if you are waiting for things to settle down, this is the time you can still approach. So thank you for clearing that out. Now, like we were talking about the current situation, what is the from investor point of view, what is the situation of the real estate market right now? And we're not just talking about the investors in USA, we're talking about foreign investors as well. So what's your take on that?
So I will again, I've been doing this for 27 years. So I saw the 2002 dot-com bust. I saw the 2007 Lehman Brothers collapse. Then 2012, the real estate market really was slowing down. Whenever the real estate market came back, it came back with a bang. Is real estate safe to invest compared to stocks, bonds? If you want to diversify, I personally, and I believe practice as you preach, I have more than 50% of my investments in real estate. It's not that I'm not diversified, but I still believe in real estate because the reason being, what I see is real estate, it can never go zero. Even if you burn down your house, there will be value for the land. Stocks, we know a lot of companies that have gone out of business. Means, so what I'm trying to say is, I feel I always lean more towards real estate because I frankly know a lot about real estate. But if my friends ask me, I always encourage them. And I'll give you a quick example. I have clients who have purchased 7 or 8, who have financed 7 or 8 homes from me, literally. And every 3-4 years, they'll refinance on their 2 or 3 investment property, take that cash out from that investment property and go and buy another investment property. So after the second or the third property, they are not putting money from their pocket. They're getting cash out on the property which they bought 3-4 years ago. Now take that money and go buy one more property. So now what are they doing? They're building their real estate portfolio and putting their money to work for it. They invested one time that 50,000, 100,000. And now that after 3 years, now that 100,000, they bought 2 properties. Now they're buying the third property. After 3 years, they're buying a 4th property. Is it possible? Yes, these are actual real examples I'm giving you. And like I said, if you all have any questions, I can go into details tomorrow. I can give you some examples, do the math with you, and then you will exactly understand what I'm saying. And this is the last 10, 15 years I'm talking about.
Definitely. So when we talk about foreign investors, so can you tell about like the states? We have mentioned some states as well. What are the best states to invest in from an investment point of view? What do you suggest?
Well, again, going by the study, South Carolina, of course, if you can find something in California, it's whatever the climate change, everything, but California is still holding its value. Florida, Texas, these are the top states to invest in. And Virginia, for some reason, Virginia always pops up. So these are the top states I would invest in.
I see your biasness towards Texas.
In history and
your face lit up when you were talking about Texas.
No state income tax, the beauty of Texas.
All right. So, about the foreign investors, we discussed it in the last webinar as well. But for those who did not join us in the last webinar, so if there is anyone who is not from USA and they want to purchase a property, invest in United States, how can 𝐷ream Home Mortgage help them? Do they have to fly all the way to USA? What are the requirements? Can you please explain it one more time?
Now, Nagin, the beauty is you can be in Dubai, Pakistan, India, London. I'm giving an example of London because I closed the most recent deal from a borrower from London. His brother lives in Dallas, and the brother told him, his older brother, to invest in Dallas. So they bought a house in Wiley, Texas. Now the foreign investor is from London. He called me. He could not believe it because London, the entire process is different. So he had to put 30% down. He had to wire the money 3 days before to the title company. He does not have to come to the United States. If he didn't want to, he had to just send his brother a power of attorney, and the brother could close on his behalf. So even without coming to the United States, he can buy a house as a foreign investor with 30% down. And this is not a special program or nothing, that it is just out there for foreign investors. So you can literally buy a home with 30% down, no questions asked. The requirement is you have to show the money in, like, again, giving you this example, in your bank account in London, they had to send me 2 months bank statement, and of course copy of your driver's license. 1 week before the closing, he had to wire the money to the title company, and all his down payment had to be with the title company 3 days before closing. 3 days before closing. And then 3 days later, we were able to close his loan.
That's amazing. So if you are looking for an investment opportunity in USA, so 𝐷ream Home Mortgage is your go-to partner there. All you need to do is go to www.dreamhomemortgage.com. You can book a free consultation session right now. Our email address, our contact details are in the chat box. If you have anything to discuss, if you have any questions you want to ask right now, you can ask them in the chat box and we'll get to them at the end of the session. I can see a lot of questions coming up. And now there's one more thing, sir, refinancing. What are we getting to add? Do you think this is the right time to refinance?
Now, rates are definitely headed, means they are going down. So if you want to wait it out, that's fine. But I have already seen clients who had 7.25, 7.5, they have already started refinancing. Some of them have already, they're already also applied for cash out refinancing. Now, today I got an application where the example I gave, she wanted to go for a 2-1 buy down, and then we did some numbers, and then she went for a 1-year buy down. So where instead of getting 6.5, she got a rate of 6.75, but her start rate would be 5.75, and then next year it would go to 6.75. By that time, hopefully the rates will drop. Now the beauty is the first year buy down, she is not paying for it. The lender, we are paying for it. The lender is paying for it. Of course, that is built into her rate. But the net effect is hopefully within the next 18 months, she will be able to refinance. And why I'm saying that, because hopefully the rates will be closer to 5, 5.5. That's what we are anticipating in the next 12 to 18 months. So is it a good time to refinance? It's all about your interest rate. If you are paying 7.25, 7.5, definitely worth for you to refinance.
Great. Okay, so now we're going to get to the questions, but there's one question that caught my eye, and I'm going to ask you that one first, because that one is about your better half, and we're missing her today, and I'm sure you're missing her too. So there is the person who's saying that I thought 𝐘𝐿𝐵 was Rahim, saying that I thought 𝐘𝐿𝐵 was going to attend the webinar. I wanted to ask about real estate fluctuations, and is it safe to buy or sell in LA? So we don't have 𝐘𝐿𝐵 here with us, but we have the better alternative for now. You can trust him as much. Unfortunately, 𝐘𝐿𝐵 couldn't be here because she had some other commitments that popped up, and she had a conference to attend. So why are you smiling?
Actually, she was taking real estate classes today, so that really drained her out. 18 hours in 2 days, so she got just drained out. LA, I would love to invest in LA. Means who wouldn't want to own a property in California, especially Los Angeles or Santa Monica? But again, the risk and rewards. I think if I had to invest, I would rather. And again, since I know what's going on in Texas, I would rather invest in Texas or somewhere where I can get probably the price is right, where the rental the rent on those property justifies what you're buying the property for. California is just like, it's really highly priced to make an investment. Just to buy an investment property, I'm not a big fan of Los Angeles. Just to have a vacation home, second home, definitely. I would love to own a home in Santa Monica or Los Angeles. But from investment point of view, no. As an investment property.
So I hope that answers your question, and I am sure 𝐘𝐿𝐵 would have answered it the same. So now moving on to the next question. The next question is from David. Hi, last time I heard there are grants for first-time buyers. How do I find out if I qualify? Is it still available, sir?
So like I said, that grant will be available again on May 1st, the one that our bank is offering. It's based on the median income of the county you are trying to buy and the number of household members, not the borrower's income, but the entire household income. So three things are important. Your household income, how many people are living in your house, and which county you're buying, the median income for that county. Based on that, you will qualify. And our grant goes up to $25,000. It will again open up May 1st. At the same time, there are a lot of other counties that are offering grant. It's called DPA. So if you are trying to buy a house in Fourth Ward or whichever county you live in, try to call your county, call their housing department, and see where they are offering you down payment assistance. It's called DPA, down payment assistance.
All right. Thank you for this information. I hope this answers your question. And the next question is, what is the duration of mortgage approval? And why would someone need to reapply after being initially approved?
I didn't get that question actually.
The question says, what is the duration of mortgage approval?
So the pre-approval itself it's valid for 60 days. The process itself from signing a contract to closing can be done in 15 working days. And then within 60 days, if you don't find a house, then we have to just update the pre-approval letter. I hope I answered your question.
Yes, I think this is what they were trying to ask. But if it did not, if you were trying to ask something else, please drop in another question. Now there's another question about commercial plot. The question says, can I get a loan to buy vacant commercial plots in California?
In California?
Yes.
Yes, you can. For mostly commercial lots, you will need to put around 35% down. Keep in mind, for commercial lots, you need to put 35% down. And mostly our loan amounts at Dream Home, the minimum is $150,000 for lots in California.
All right. So the next.
I saw that question pop up, and it's a very brilliant question. And I want everybody to listen to me very carefully. I just read it. I just read where it says, I just paid off my car. Will it help my credit score? I just read that 2 lines. And again, am I missing anything important, or that was the gist of the question?
I guess it says, I just paid off my car loan. Will that help my credit score before I apply? My colleague just told me it will.
Wrong, wrong, wrong. That's why I said, bad news is when you pay off your car, immediately your scores will go down. So people are surprised when I say that. But that's a fact. Because now what happened? You paid off an installment loan. So that credit limit that was available, that got shut. So now it shows 0. So suddenly your available credit was, let's say, $150,000. You paid off a $30,000 car. Your credit limit dropped from $150,000 to $120,000. So the immediate effect is your scores will drop. So never pay off a car before you apply for a loan. Let the loan officer apply for your loan, and then you pay off the car. First, let the loan officer pull your credit, especially when you know you are going to close on a house in next 90 days.
All right. I hope that clears the situation, that the colleagues might give you some good advice, but at the end, you must go to a professional and expert mortgage lender so that you get the real idea. So please just note it down in case you were thinking about doing that. Just put a pause on it. And I would suggest that book a free consultation with Dream Home Mortgage. That would give you a clear idea of what you need to do in order to improve your credit score and your pathway to your home ownership. So there's another question, sir, that says, I keep hearing rates might drop, but should I wait to buy, or is now still a good time?
What was the question? I just lost you for a second.
The question says, I keep hearing rates might drop, but should I wait to buy, or is now still a good time?
I just said that the problem or the issue is, I don't want to use the word problem, but if the rates drop and then you jump into the real estate market, the house prices will already go up. And I always give this example that you can always refinance your interest rate. Yes, you have to spend $4,000 to $5,000, but you cannot renegotiate the price of the house once you have closed on that house. So if the market is tilted towards a buyer's market, sellers are ready to negotiate. They are more aggressive on selling their home, especially the house which are stuck in the market for 60, 90 days. Once it becomes a seller's market, you won't be able to negotiate that price because now there are more buyers out there. So I would rather buy a house for $400,000 at 6.5% interest rate and then refinance it later, But when the rates drop to 5.5%, that house that I could have purchased for 400,000, I will guarantee you that will go up to 450, 475. That's the history of Dallas, Texas itself. And again, whichever states the real estate market is hot, that's what we have seen. When the interest rate starts dropping, the house prices starts going up.
All right. Next question, sir. It says that what makes FHA loans more expensive and have higher closing costs than regular mortgage? Are there any alternatives to avoid these costs? Please answer my question. I really need that.
So FHA loan, if you are putting less than 10% down, your mortgage insurance will never go. You have to keep paying that. Plus, you have that 1.75% fees. But FHA interest rates are lower than conventional rates. So when we talk about the payments, FHA payments are almost going to be the same or lower in some cases. Even though you're paying that 1.75%, which is added to your loan, that 1.75% of the cost loan amount is added to your loan. So sometimes my borrowers will take a higher interest rate and take lender credit to cover that 1.75%. But again, like I said, if you have good credit, you don't have to go for an FHA. But in some cases, even after paying that 1.75%, you get a better interest rate and you easily qualify for an FHA loan. Same answer, it's always going to be case by case basis, but we can always compare and then decide. But to answer your question, the mortgage insurance, the upfront mortgage insurance makes FHA a more expensive loan. And of course, conventional loan, your PMI, your mortgage insurance will drop once you reach 22% equity. Once you have reached to 22% equity in your house. FHA loan, if you put less than 10% down, it will never drop. Even if you put 10% or more, it will drop after the 11th year. They have been planning to change that law for a while, but it has not happened yet.
All right. There's another question related to FHA, so I would like to include that in. It says, "Hi Hussein, can you explain the process of refinancing home with FHA reverse mortgage?"
So FHA reverse mortgage is what is where you can get money out with minimum income documentation, like minimum income documentation, and that's for senior citizens, mostly for 62 years or older. So FHA reverse mortgage is basically where you're trying to get money out with very minimum income documentation. Those are for senior citizens, borrowers who are older than 62 years old. There is something called FHA Streamline, where you don't need any income documentation. You just have to have good payment history on your loan. But with that program, you cannot roll in your closing cost or you cannot roll in your escrow. You have to bring that money at the time of closing. So why would you go for an FHA Streamline? Let's say your rate is 7% and you recently got laid off. FHA Streamline would be a great option for you. So it's always going to be case by case basis. Which program, why should we go? Why shouldn't we go? That's why I said in the beginning of my show, don't be scared to ask questions to your loan officer. Why this, why this, why this not?
Definitely. So there's another question. I think we discussed this question while we were discussing the H-1B visa. So I think it's clear now. Nitin asked about the clear picture of H-1B visas. The next question, it's again, I think we have pretty much covered it. It says that it's real estate worth investing right now. I'm worried about it. It's also uncertain. Do you think home prices will go down to? I think you have cleared this already. So next question says that, can I switch from an adjustable rate mortgage to fixed rate one if rates drop?
What was the last part, ma'am?
It says that they want to switch, can they switch from adjustable rate to fixed rate if the rates drop?
Yes, definitely you can. I mean, it's just like refinancing. And at Dream Home, again, we offer you an option where, like I said in previous shows, either you don't have to pay any money out of pocket or you don't have to pay any closing cost by taking a higher interest rate, or you pay all the closing costs and add it to your loan amount. So there are different programs, different borrowers. So adjustable rate, you want to go to fixed rate, and you can finance all your closing cost. But yes, you can anytime refinance from an adjustable to fixed rate or fixed rate to adjustable rate.
All right. Again, a question about investment. Which states have the best rental potential right
Now, again, you give the answer.
Texas.
100, 10 on 10. No, jokes
All
apart,
right.
that is a fact. Texas, and if you can find any beachfront properties, Airbnb is still, there's some juice out there. It's very competitive. I saw that question also. But if you can get some oceanfront, lake access properties, they are always selling. They're renting for, they have good ROIs if you can find a good deal.
All right. Now there was next question about refinancing. I think we have covered that question as well. Now the next question, I want to know about how do I build up credit score. Thank you, Sen, for organizing the webinar. Much needed. So the main question is how to improve the credit score.
So basically, I'll give you 2-3 examples, quick examples. Credit, how do you build your credit score? If you don't have any credit or you had a bad credit 2-3 years ago, no other creditor is ready to give you credit cards. Get 2 or 3 secured credit cards. Start with 2. Don't go crazy and start going here and then applying for a loan. Just go with 2 credit, apply for 2 secured credit cards, and then start building from there. Other than that, have your family members, some wife, spouse, brother, sister, uncle, aunt, make you an authorized card user, So that way your credit will start building. But the quickest way is have a couple of cards where you can add secured credit cards, and then 1 card where you can go and add your name as an authorized user. I have had clients, they had no family member. For the first year, even though they had money, they went and financed their car. They put 30% down and then financed their car at 12%, 14% interest. Just for 6-8 months after a year, they paid off that loan. So what happened, at least by that time, now they had some credit history, and they applied for another credit card during that 12-15 months, because now they had a car on their name that they had financed. But the simplest way is get a couple of secured credit cards. The fastest and the simplest way.
That would be a good suggestion. So next question is about the federal assistance. It says, how can I apply for federal assistance loan to help with financial struggles?
So, like I said, there is no federal down payment assistance that I am aware of for buying homes. There is county, and then there is cities in certain zip codes. But federal assistance for buying homes, I am not aware of such. There are down payment assistance, like I said, in the different counties. There are some non-profit that they offer down payment assistance. But from federal government, I am not aware of any. And I don't think this government is going to do that for sure.
I would suggest that if anyone has such questions, you can always schedule a free consultation session so you can explain your case better. Like Hussein always says that it's going to be case by case. So if he knows your history, where you're coming from, what you're exactly looking for, then he can guide you better about it. And to book a free consultation session, all you need to do is go to our website. It's www.𝐿𝐵𝗿𝐿.com. You can book a free consultation session there, and you can discuss your case to get a better idea. Now, next question, like you were talking about Airbnb. So is Airbnb still a good investment, or is it getting too competitive?
In very honest answer, in some pockets, I know people making 25-30% ROI. I have a client who bought properties right around Austin, and he's doing really good. And I know a personal friend of mine, he was doing Airbnb for last 2 years. Then probably mid of 2024, he completely got out of it. So it's always going to be which market you are in. Overall, yes, Airbnb has, I think it's saturated, unless, like I said, it's a lake access, beachfront, special niche market. near state capital or near a university, that's always going to be in high demand.
All right. The next comment is from Riddhima. It says, Hussein, you are great at your work. You know what you do. I really appreciate your efforts, all this information for free, and everybody's just thinking about business. So that was a kind remark for you. Thank you, Riddhima.
What was that, ma'am?
It says that you are offering all this information for free when everybody is just thinking about business. You are putting in the effort to give this information to everybody.
See, my thought process, and very honestly, from the bottom of my heart, I am where I am because of the community and the support I got from the community for the last 27 years. We have funded over $1 billion in loan, probably 3,000-4,000 families. The biggest compliment is when I do the loans for the first generation, second generation, and now the third generation. So I feel I owe it to the community. And I honestly, when I see people making, excuse my language, stupid mistakes, and I'm like, why? They should have asked someone, and I find out after the fact, and sometimes realtors taking advantage of them, builders taking advantage of borrowers because we are giving you $15,000, but then they're charging you 1 point and giving you 1% higher interest rate. So that's why I keep emphasizing, ask those questions. Even when you come to me, make sure you ask me questions. Why? What? Why am I doing this free seminar? Yes, of course, marketing is there, no doubt. But at the same time, I feel 50% marketing, 50% I owe it to the community. Very honest answer.
Very honest. Definitely, if somebody is in the industry for 27 years, they are doing something more than just business. They are building relationships. They are building the bonds that are needed for that community. So thank you so much for such a kind compliment. And moving on to the next questions, it says, by any chance, is there a way to lower my monthly payment without refinance?
Not that I know of, unless you can shop around only thing you can reduce is your property taxes and insurance. One thing to all the homeowners, again, just a side note to all the homeowners, every year the city sends you, especially in Texas, and I know most of the states, they send you a letter that, hey, we have assessed your value for a certain amount. A lot of people, they say, it's only $20,000 here. Why should I do that? It's only going to save me $300 a year. But think about if you start appealing that value and they allow you to appeal the value. If they reduce even $25,000 from a $400,000 home and they do it for 4 consecutive years, property tax on $100,000 is $2,500. So now by taking out 30 minutes or 1 hour of your time in a year, in the whole year, you have to spend 1 hour, 2 hours maximum of your time. And in 4 years, you will be saving $2,500 to $3,000 on property taxes. So if you're a homeowner, you know what I'm talking about. Make sure 2 things: appeal the tax assessment that this county sends you every year, and shop around for your insurance every 2 to 3 years. Very, very important. I'm telling you from my personal experience, shop around for your insurance every 2 to 3 years and make sure you appeal the value when the county sends you that assessment. And that will help you to save some money at least. Even if it's $150 to $100 a month, that's $1,200 a year. That's of your own money that you're saving. I'm just advising you. But it's your money you're saving.
Okay, now there's the next question. It says, can you get approved for mortgage loan if you get a new job?
If you have yes. So now I cannot just say yes, but I'll try to make it as quick as possible. Let's say you graduated as an accountant and you found a full-time permanent job as an accountant. Even before you start the job, you can buy a house, as long as there's no contingency, as there's no probation period. Second scenario, you had a job, you quit that job, you had a 3-month job gap, now you found a full-time permanent job. You've been on that job for 1 month. Yes, you can buy a house. The only challenge is two scenarios, what I'll tell you. You have a long job gap. Now you found a long job gap. Anytime you have more than 6 months of job gap, and you started a new job, you have to wait for 6 months. As long as it's a full-time permanent job, you'll have to wait for 6 months because you had a 6-month job gap. And the biggest mistake I see in two industries, IT and medical industry. They are buying this $1.2 million home. They are building a 1.2, even a $800,000 home. They were on W2 during the construction time of their home. They switched from W2 to 1099. If you switch from W2 to starting your business B2B 1099, you won't be able to get a regular loan. But if you switch from 1099 to W2, not a problem, as long as it's a full-time permanent job. So to answer your question, yes, you graduated, you found a full-time job in the permanent field, same field, even if you're at a job for 1 month, you can buy a house.
All right.
Again, very generic answer, but you can call me anytime.
All right. So there's this next question that says, what are the pros and cons of taking maximum tenure home loan versus a shorter one?
Simple, very simple. Long term, 30 years, lower payment, higher interest rate. 15-year or 10-year, short, of course, lower interest rate, higher payment. If you're a first-time home buyer, if you are concerned about your job, layoff, if you've just entered into this field or you've been just doing for 5-7 years, you see a lot of layoffs around you in the field that you're working for. I would tell you to go for a 30-year loan. The reason being, you can always take a 30-year loan, pay $200-300 extra and pay off that loan in 20 years, 23 years. But if you commit for a 15-year loan and you lose your job or your spouse loses his or her job, you are still committed to making that higher payment. So in the beginning, commit yourself. When you're applying for a loan, apply and commit to the bank the lowest payment possible. But to yourself, you commit that you're going to make the maximum payment possible and try to pay off your house. I always say, leverage your investment property. Leverage your investment property, but pay off your primary residence. That's my philosophy.
That's definitely a very good suggestion. Now, so the next question, it says, what documents are required for pre-approval letter?
Listeners, keep this acronym in mind. CIA. CIA. In United States, when we hear this 3 words CIA, we start shivering. In the mortgage industry also, CIA is as important. Credit, income, assets. Credit, income, and assets. The whole mortgage process, whether you're buying a $150,000 home or a $3 million home, it's all about your credit, your income, and down payment, assets, down payment. So manage your credit. Don't switch your jobs when you're trying to buy a house. And down payment, make sure you have the down payment in your account for at least 45 days. If you're getting all gift, great. For primary residence, you can get all the money, all gift from your parents, your brother, sister, uncle, aunt. But make sure you talk to your loan officer. There is a certain way to get gift and with minimum paperwork and avoid all the headaches. Discuss with your loan officer when you are trying to get gift. So to get pre-approval, remember this acronym again, CIA, credit, income, and down payment or assets.
All right. Now there is a question, there is a sort of discussion going on about teachers. Are there any special programs for teachers, any grants?
Yes, it's called a TSHAC program. Again, there's a certain program that only certain banks offer them. The good news is, yes, there is grant. The bad news is the rates are much higher. But again, teachers, firefighters, police officers, I have a lot of respect for them. Means the most selfless job. And we can't take care of 2 kids and they are handling 200 kids. And so anyway, same thing, firefighters and, anybody who serves the public. I have a lot of respect for them. So yes, there are certain programs for them.
All right. So continuing with this about the teachers, there is another person, Parth, who is saying teacher get discount price, loan, mortgage. I think that's the same question, right?
Discount, yes, they can always buy discount points. So discount point is basically you are paying extra points to get discount on your rate. I'm not a fan of it, but some clients, when they're getting money from their company or their realtors are giving them some money, they buy points. I am not a big fan of discount points.
All right. So Pooja, yes, Pooja was saying that teachers don't get the special treatment, but I guess they do. So if there's any teacher here who's looking out for that, please make sure you book a free consultation session, and we'll get to your case. We'll get to know you better. We'll get to know your case better and guide you better. Now there's another question from Pooja that she's asking about Texas loan price. That's the only statement. So, and there's a question mark. So, can you answer that?
What was the question, ma'am?
It says Texas loan price.
Texas loan price.
Yeah.
Or interest rate, current rates.
Probably.
Texas prices, the house prices right now in the DFW area is around $200 a square foot, $175 to $250 in most of the pockets, in which is in high demand. They can go up to $300 a square foot. Interest rates, like I said, we were quoting 780 credit score today at 6.375. 20 years has been the flavor of the month because it has been lower than 6%, and I'm also pleasantly surprised. Of course, for that you have to have a 780 credit score, and the APR would be around 6.11, but the rate was 5.99. So those are for 20 years and 30 years respectively.
All right. The next question is says that is there any advantage to take loan from an approved lender of the builder as they give incentives or outside?
So compare, shop and compare. I mean, again, I can give you examples where I had a builder from Texas, named after Texas, giving their client $15,000 in incentive, but charging higher closing cost and giving them 0.5% higher interest rate than what we were offering them, plus charging them higher closing cost. So,
and sorry to interrupt you, I'd like to add here, they have mentioned in another comment that but approved lender calculations are confusing.
But yes,
approved lender calculation.
Exactly. So their closing cost, like I just got a loan from a borrower, and the builder clearly said that we have to make some money if you're giving you $15,000. So we won't match Dream Home's rate. But if you go with Dream Home, you lose the $15,000. Luckily, I still got the loan because our rates were almost 0.375 lower. But our closing cost, when everything was done, he had to bring around $3,800 more at closing compared to the builder's estimate. But our rates were almost 0.375 lower. So then the borrower decided to go with us. Even though the builder was giving him $15,000. But after doing and charging him a point, we were giving him a rate lower, not charging him a point. So of course, when he did the math for next 5 years, our option was much better.
So I think I was going through all the questions. That sums up all the questions. There's a question about refinancing that we have answered earlier. There are some comments for you. Mrs. Singhania, she's saying, well done. And there's another person called Joy. He's saying, thank you, Sen and team, for your efforts. Much needed. Thank you so much for listening. There's another one saying, thank you, Hussein, for answering my question. And there's another person who's saying, Ramadan Mubarak to you. So I guess it's a happy ending.
Thank you. And debt to income ratio, on FHA loans, we can go up to 56% back-end ratio. On conventional loan, we can go up to 49.9 back-end ratio. So to give you a quick answer, again, all of you guys listening and girls, Thank you for joining us. It's almost 9:08 p.m. over here. So I really, really appreciate everybody hanging in there for last 1.5 hours. And sincere apologies for the technical difficulty we had in the beginning. Again, Nagin, as always, you are the star. You get everything together. You hang in there when I start getting nervous and I start getting my jitters. I don't know how you do that, but thank you for putting this show together. And once again, thank you to all of you guys. And if you have any comments about the show, how can we make this webinar, how can we improve this webinar? And if you all are interested in anything, any other topics, please give us your feedback. You can send us an email to info@dreamhomemortgage.com.
Definitely. Thank you so much. So our